Hello and welcome to the XFO Intelligence Podcast. Today, we'll be delving into an in-depth analysis of Hong Kong's wealth management boom and the hidden fault lines within this massive global ecosystem. We're going to unpack the eye-opening insights from the Securities and Futures Commission's groundbreaking 2025 report, and we'll explore what lies beneath the record-breaking numbers. Let's dive in. In July 2026, the SFC highlighted some incredible facts. By the end of 2025, Hong Kong's total assets under management hit a record 42.2 trillion Hong Kong dollars, equivalent to about 5.4 trillion US dollars. That's a 20% year-on-year surge. Even more astounding was the 193% explosion in net fund inflows, reaching 2.1 trillion Hong Kong dollars. At the same time, the number of single-family offices in the city surpassed 3,380, and open-ended fund companies grew by 43%. But what's really going on under the surface? Hong Kong isn't just a simple conduit for mainland China capital anymore. The 2025 data shows a massive shift. Now more than half, 56%, of total AUM is allocated outside mainland China and Hong Kong. Global investors and ultra-high net worth families are using Hong Kong-based managers for global allocation, not just regional exposure. Hong Kong has evolved into a multi-node hub, rivaling London and New York. But as the inflows skyrocketed, a hidden vulnerability emerged. The operational capacity of the ecosystem couldn't keep up. We call it a metabolic bottleneck. Much of the heavy lifting, fund onboarding, compliance, and structuring, is outsourced to a shadow enabler network, boutique tax advisors, trust companies, regtech vendors. These players are stretched to the limit. Their human capital and legacy systems have a hard ceiling, leading to delays and cash drag, where undeployed capital erodes returns. The challenge is no longer fundraising, it's capital digestion. If the shadow enablers hit capacity, the whole network could seize up. Then there's the geopolitical dimension. As global powers clamp down, some capital has been routed through the Middle East, feeder funds and family offices in the UAE, creating stealth routes to navigate compliance friction. But these routes rely on the regulatory neutrality of the UAE, a fragile assumption as Western regulators press harder on the UAE to tighten AML and sanctions rules. If these channels break, Hong Kong managers could face mass de-risking events, breaking the very supply chain the market currently depends on. So what's the road ahead? To sustain this growth, projected at around 9% annually through 2030, Hong Kong's wealth management industry has to pivot. Digital infrastructure is key. Integrating AI and automated regtech can multiply capacity and reduce bottlenecks. Also, product harmonization, expanding the cross-boundary wealth management connect, can diversify the capital base and reduce reliance on friction-heavy, ultra-high net worth inflows. In conclusion, the record-breaking $42.2 trillion AUM isn't just about numbers. It reflects a living, adaptive financial organism. But its future strength depends on addressing the hidden fault lines that could bottleneck its progress. If you enjoyed today's episode, make sure to like, share, and subscribe to the channel. We'd love to hear your feedback. Drop us a line at xfointelligence@gmail.com. And if you'd like more information on our new Thought Leadership on Demand service, send us an email anytime. Disclaimer: this podcast is for informational purposes only and does not constitute financial or professional advice. All opinions are solely those of the speaker. Thanks for listening. We'll see you next time on the XFO Intelligence Podcast.